Good afternoon, team. This is Isaac with your Mortgage Minute on July 8th, 2026. Today's market is another reminder that mortgage rates are still moving on headline by headline right now. Earlier this week, we had some relief in the bond market because oil prices had cooled and 10-year treasuries had backed off. And the market is starting to believe that tensions with Iran may be stabilizing. But today, that story changed. President Trump said that the Iran agreement or ceasefire was basically over. The markets immediately started pricing in more geopolitical risk. Oil jumped sharply, and when oil jumps, inflation's fears come right back to the market. That matters because higher oil prices can feed into transportation costs, consumer costs, inflation expectations, and when inflation expectations rise, bond investors demand higher yields. That is exactly what we saw in the 10-year Treasury moving back up to mid 4.5% range. Not great for interest rates, and mortgage rates are under a lot of pressure again today. Now, here is the important update from the past week. Last week's jobs report actually came in a little weaker than expected. We saw job growth slow, and that initially helped the market reduce the odds of an immediate Fed hike. That was part of the reason why rates had a little breathing room this past week. But the problem is inflation is just still too high. The most recent CPI report shows that inflation was at a 4.2% year over year, and core inflation is still running above the Fed's target. So even though the job market is slowing, some signs are cooling. Inflation has not cooled enough for the Fed to relax. That puts the market in a tug of war. On one side, you have weaker jobs data that helps rates. On the other side, you have higher oil prices, sticky inflation, and renewed Iran tensions, which hurts rates. So today, the inflation side is winning. They are also waiting on the Fed minutes today, and this is important because this will be the first set of minutes under Fed Chair Kevin Warsh. The market is watching to see how hawkish the Fed really is and whether they are seriously considering rate hikes later this year. My opinion is that we are not considering any rate hikes this year. Donald Trump put this guy in for a reason, and that's to be an anchor at the very least to rates. And also, if you, my honest opinion, if you were to raise rates at this point, you would hit a knockout blow to this economy. And if you hit a knockout blow to this economy, 401ks go down, home values go down, lots of asset classes go down. They're not going to do that. It's just not something that he does or is expected to do, in my opinion. Okay, another update from the past week is the housing bill. President Trump still has not signed the bipartisan housing affordability bill. The bill is designed to help speed up the housing construction and improve affordability, but he has made it clear that he wants other legislation moved first before signing. So the bill is not necessarily dead, but it is delayed. And for now, that does not give us the housing market any immediate relief. So what does this mean for buyers in real estate? It means that we are still in a volatile market. Rates can improve when oil drops, jobs soften, or bonds rally, but those improvements can disappear quickly with geopolitical headlines or inflation fears come back. For buyers, what this strategy usually means is get fully approved, understand the payment, and be ready to move when pricing improves. But we are not in a market where rates fall straight in a straight line. We are in a market where there's windows of opportunity open and to close fast. This is your Mortgage Minute for the day. Please feel free to join us in Funnel Fridays on Friday, where we support you with CRM, email drip campaign, and also website building, like landing pages and other things that you might be getting into. Recently, I've been getting into webinar creating. So if any of that interests you, see you on Friday from 11 to 2. And then on Monday, we have power prospecting, where we provide you leads to do some cold calls and get some sales reps in. If any of that interests you, I'll see you on Friday in San Pedro office, and then I'll always be there on Monday for power prospecting in Redondo. Thank you so very much, team. This was your Mortgage Minute.